I guess yesterday they announced that more than 6 million Trump accounts have already been opened.
Wow.
And if they're all getting $1,000, it's $6 billion of new assets into these funds.
Yeah.
I mean,
It's not nothing.
no. Not
I
at
actually
all.
think that's pretty impressive. I wouldn't
cool.
have thought
Yeah,
it'd be that
that's
fast.
a lot.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt here with John
Hello.
and Isaac,
Good morning.
and we're ready to roll. We got 4 good topics
Oh,
today.
great topics.
Good
times.
Before
Great
we get into the good stuff, anything we want to say about U.S. soccer?
That was it.
Yeah.
It was a rough
They
showing.
do. It's unfortunate, but they do what they always do when they play a really good team.
Yeah.
That's unfortunate. We're not a soccer country.
We're
And
really good at basketball.
We're really good at basketball and football.
Really good at football.
And even, somewhat good at
Also
hockey.
the best at hockey.
Yeah. I mean,
Which
we've
is
got
cool.
We've got some good things going for us, but
So who
Soccer, we're
are
still
you going
behind.
for now? With the
great
US
question. I think France is the best team.
Mm-hmm.
I think I'm rooting for, I don't know why, but I'm rooting for England.
out? Okay.
I like England. I like their team. But France is really good. I think that's going to be a tough team to beat.
Yep.
I haven't watched a single game.
Go
so
Birds.
He can't wait till NFL season.
He's still stuck on the real football. So, all right, let's jump into it. So today we're going to talk about 4 different things. First one, ETFs. So ETFs continued rise. So, man, it wasn't long ago where I felt like, mutual funds owned
Everything, yeah.
the investing landscape, right? Everything was mutual fund driven. And then this new kind of idea, this fund option came out, exchange traded funds, ETFs, and man, have they taken off, and that trend continues. So investors are, drawn to some of the benefits that they have, from a tax perspective relative to mutual funds. And I think a big one is just the tradability, right? The liquidity, being able to trade intraday like a stock versus a mutual fund trading at NAV at the end of the day. So, a lot of good things to, like about ETFs versus mutual funds. And so that trend has continued. Andrew Welch had an article on Barron's talking about how this year, not only has that trend been over the last several years, that trend has really picked up. This year we're on pace. We did $1 trillion of asset flows into ETFs, putting us on pace for $2 trillion for 2026, which would beat last year's record of $1.5 trillion. ETFs now have just under $16 trillion, which is like 2 days old, so maybe we're at $16 trillion. But it was $15.8 trillion of assets in ETFs, with new ETFs being launched daily. And as the market continues to rise for as long as it does, this number is going to continue to accelerate, in my opinion. Any thoughts on just this trend of, the rise in ETFs and that's where all the flows are going, or a lot of the flows?
No, I just think it makes it so much more digestible for like somebody who really doesn't want to think about it, right? You can find, there's an ETF for anything, any category you want. Say, hey, I really like that. I'm just going to, instead of doing research on 100 different things, I'm just going to buy that.
Yeah.
And so it just makes it super accessible.
Yeah. Well,
and I think that's the popularity of it.
Yeah, active ETFs and how many there are and how easy they've become to launch. Like you can have an opinion, an investing opinion.
Yeah.
Without having to go pick an individual name.
Yeah, so passive
Yeah,
versus
yeah.
active. So passive, the ETFs are very popular passive because you can buy the S&P for almost no cost, right? It's a very tiny cost. The active, which I love, the active, like you were just talking about, if you want just AI stocks, or you just want precious metals, or you just want Europe, or you just want a specific country like India, you can find it in an ETF.
Yeah.
Mutual funds, in my opinion, have been, I think they're going to be out of our system at some point. I know that sounds really wild to say that because mutual funds have been around forever, and they're
still huge.
They're huge, and they serve a massive purpose. But most of the mutual fund companies, Vanguard, Fidelity, on down the line, have adopted heavily into ETFs. And that's just been in the last 10 years or so that they've decided that ETFs is the way to go.
Yeah.
So I think you're going to see at some point, just the inefficiencies of the trading of mutual funds and just the tactical and passive nature of the ETFs I'm a big fan of ETFs. I'm not surprised of this, and I think that trend is going to continue and continue.
So mutual funds still have around $24 trillion in assets, which is crazy.
I wonder how much of that is 401k.
Yeah, because
Like it has to be in a
Yeah.
mutual
well,
fund, right?
okay, so
almost all mutual funds. I mean, almost all
Yeah.
401ks have mutual funds only, right? ETFs are just now starting to sprinkle
Yeah.
into 401ks.
So 401k plans are approximately 10 trillion.
Mm-hmm.
So a lot.
So a lot of
Yeah.
that, you know, is
Yeah.
in that 401k. So there's 24 trillion in mutual funds. Yeah, so the 401k
interesting.
space makes
Yeah.
up a big part of that for sure.
Yeah. This doesn't surprise me. I love ETFs. I'm rock on.
Yeah.
Amen, brother.
Yeah. All right. That's just, I don't know how
That's
else
a good way to end
okay.
it.
But on that note, so next topic, we're talking about Trump accounts. So the
Yeah.
Treasury rolled out the investment options that they're anticipating in the Trump accounts. So Andrew Welsh on Barron's talked about the investment options. The last article, same guy. So this guy's all on top of it. Treasury Department on Wednesday said the default investment option for Trump accounts at launch will be the State Street Spider Portfolio S&P 500 ETF, SPYM. Which ETF versus mutual fund. It costs 2 basis points, 0.02%. Other four investment options will be available in the coming months, including BlackRock's iShares and Vanguard's funds, iShares Core S&P 500 ETF IVV, Vanguard's VTI, State Street's SPTM, and iShares ITOT. But it's all total U.S. market kind of. Like SPTM is S&P 1500 or the S&P 500. They said that's what the options were going to be, low-cost options. The last four I mentioned, are 3 basis points in terms of their costs. So this will, only add to the flows in ETFs like we were just talking about. But any thoughts on these options being what's available in the Trump accounts?
No, I think that's exactly kind of what it's intended for. I just looked up, I guess yesterday they announced that more than 6 million Trump accounts have already been opened.
Wow.
And if they're all getting $1,000, it's $6 billion of new assets into these funds.
Yeah.
I mean,
It's not nothing.
no, not
I
at
actually
all.
think that's pretty impressive. I wouldn't
cool.
have thought it'd be that
that's
fast.
a lot.
But that's good.
Mm-hmm.
Yeah.
It's good.
I feel like with all the young people we have working here and the kids, we have quite a high percentage
Probably have a
of
billion
those
of
new
that.
Trump accounts. Yeah, so I don't know how I feel. I would hope, well, maybe I don't. I don't know. I guess I don't have too strong an opinion on this. I don't love that there would just be like the S&P 500.
Yeah. It's the only thing I would think
but
too.
at the same time, I get it. It's smaller accounts, just getting started. Let's keep it simple. Let's not overthink it. So I think this is probably a scenario where like less is better than, a lot. Like
If
less
they
is
had
more,
5
but-
choices, though, I wish they had one outlier. Right? They kind of do with the 1,500, but it's all kind of large cap. So one outlier would have been nice because it's basically pick any of those. They're going to trend very close to each other.
Yeah.
Anyway.
Yeah.
Great.
Like
It's
if you're
great
going to have
free money.
options, have different options,
Different
not
options, yeah.
5 of the almost same thing.
Of the same thing.
That's fair.
For the same
That's a fair
cost.
point.
Yeah.
But anyways, interesting, the whole Trump account deal. Definitely go out and look at it. Look at Eli's data brief. He's got a data brief coming out explaining the Trump accounts. We just posted an article on LinkedIn kind of with the highlights of the Trump account. So trying to get some information out there to explain that. So be on the lookout for that. All right, small cap outperformance. So another Barron's article, actually, all over Barron's. Jacob Sonnenschein had an article. So small caps just had their best first 6 months in 35 years, outperforming the S&P 500. Small caps are up 22% year to date. S&Ps are up around 10%. Now, the last week or so, we've seen a little bit of a pullback. Small caps have underperformed. A lot of people think, though, that the rally in small caps could continue. What are your thoughts?
I think this is fueled specifically. I know this sounds really, I'm targeting one group, but to me, it's fueled by the Mag 7 stocks being sold. Mm-hmm. And where does money go? And I think small cap, we've talked about this. Didn't we say the year of the small cap like 2 years ago? The summer of small cap.
I don't remember if it was last year or the year before.
Yeah, it was
but
sometime.
It's like if you keep saying it, you're eventually
You're going to be
Eventually.
right.
It's going to be right. But I mean, I think small cap has been kind of hovering down there. And it's, historically speaking, small cap has outperformed. Go back 100 years. The last 20, it has underperformed. So think this is maybe another natural event occurring in front of our eyes. I do think it's sustainable, and I quite frankly, I kind of like it. I like that we're broadening out the market, not just in large cap from the tech to other sectors, but from large cap to small cap.
Yeah.
So I don't have a crystal ball, but I do like the idea that it's on this track.
Well, it's nice to see that it's not the same, like 10 companies just passing the same dollar around, right? It's like, NVIDIA's going to give it here, and then they're going to give it there, and then that company's going to give it right back to NVIDIA, and it's just...
Well, that's still very much happening.
It's happening,
but that's
but
not
it's
where
nice
all
to
the
see
market's
that the market is working outside of just that.
For sure.
Which
so
is nice.
There's been 3 times in the last 35 years or so that the Russell has outperformed the S&P 500 by 10 points or more during the first 6 months of the year since 1987. Only in 1988 did small caps underperform in the following 6 months. So the 2 other times they continue to
roar.
Strong economy, strong earnings, good for small caps. The idea or the chance of future rate hikes, negative for small caps. So I know that trend has been, we thought, hey, rate cuts were happening as we kind of entered the year. That quickly shifted to, hey, we may actually have a rate cut or a rate hike or 2 in the future. So like, how would small caps be able to absorb that? But I think the long and short here is, like, as advisors and people who, for a living help clients build portfolios and stay invested, and it's fun and nice to see other parts of the market working other than just, the biggest 10 to 20 names.
Exactly.
In the S&P 500. All right, last topic, Australian retirement system. So do you guys see this come out the other day?
I did. I didn't know the whole. You gave me more story this morning about the facts of it, but I did hear it and I thought it was interesting.
Yeah. So the Trump administration came out saying, "Hey, we're seriously looking at the Australian retirement system and looking at the prospects of this being maybe a way to fill kind of the the American retirement gap. Helping people get to retirement successfully." So
I heard we're going to try to reverse the flow of our toilet flushes too, but I'm not sure we're going to do that. In Australia, it's reversed. So anyway.
Is it?
The way that the water spins?
Yeah, it spins the other way. I don't know why, but it's something we need to look into.
How many times did you have to flush it and watch it to figure that out? All right, so superannuation, I have no idea if I said that right, but this is what they call the Australian retirement system. And not an expert here. This came out a day or two ago,
came out yesterday, I think.
I started kind of looking into it.
Yeah.
But from my understanding, what it is essentially is, it's similar to like a 401k. It's a deferred retirement plan, but the employer is obligated to put in a minimum percentage of the employee's compensation. So in Australia, it was 11.5%. This year it went up to 12%. So the employer is obligated to put 12% into a retirement account.
Big fan.
Yeah. And
until Matt told us how he would do it.
Yeah. Oh, I've already paid for it if y'all want to implement this. So I don't know. It's interesting. I know there's a lot more to it. And there was something else on how these contributions were taxed. Like,
different than
like Australia treated it. It was different than just your ordinary income. That
more favorable to the.
It says tax preferred.
Yeah. It wasn't tax free. It was tax deferred. It was
preferred.
It was going to be taxed at like 15%, which is lower than your ordinary income.
Yeah.
So there's some tax benefits, but the big takeaway I got was it's just a forced, employer contribution into a retirement plan.
It's also called a super account. Which is way cooler than 401k.
Yeah, it is.
So.
I've got lots of thoughts on this. I know we don't have 4 hours, but I could go into this deeply. So I think about we keep hearing, and our clients are fearing that Social Security is going to go away, right? That it's that our government is going to let it fall off and fade, and I really don't believe that is going to happen. I think they're going to find ways to extend it out. And like I've said always, the politicians only care about getting reelected, so the one party that lets it fall is never going to get reelected again. So I think for that reason alone, they will get it fixed. But if you think about the Australian system, in the way we do it here in our money that goes to FICA, and I'm going to get real deep here, but the companies now have to put 7.5% of your salary into FICA, and then you're supposed to put you put 7.5% into as well, and then that's your Social Security benefit, right? I mean, if there's a way to like adjust that
Yes.
and adjust this,
If
then,
you could, yes, if
yeah.
you could take that money, get it away from the government
Oh, would that be
altogether,
great?
and just privatize that and say, hey, we're going to still force this and make sure it's happening,
Yeah.
but it's going to be in a private account for that individual that's invested, that's not controlled by the government, that they can't just change with, the
Yeah.
stroke of a pen and legislation. Yeah, I would definitely be for that.
Yeah.
But it would require some sort of offsetting.
Sure.
Right. I mean, we can't keep the same Social Security structure, the same tax code,
And not pay it.
and say
Yeah.
employers, and then not think, So obviously they're going to have to offset that to some degree. But I don't know. The
yeah.
administration, they're speaking pretty strongly on it, saying
Yeah.
like, hey, we're seriously looking at this, and we think this could be a big part of.
If they're going to force companies to put in 12, so just think about it like this. If you're an employee, a lot of companies put in 3 to 6. Typically, it's anywhere from 3 to 6, right? If you're in a 401k plan, you're getting a match. Now, a lot of times you have to put in to get the match. In other words, if you get 6%, you've got to put in your own 6 to get that 6, right? I mean, everybody handles it a little bit different, but think like the most I think I've seen is 6. There might be someone who gives more, but so they're going to force 12. Well, that's pretty tough on companies because they have to pay the bills and pay salaries too.
And so does that, I guess, replace the 401k? I mean, because that aren't
Right, it
gonna do
would.
that plus.
You'd have to
You couldn't
replace
do
the
a match
401k.
at that point, yeah.
And if they could, that's what I'm saying, if they could adjust FICA and employers didn't have to put 7.5% into FICA, I mean, you could find a way to make this work. And it would be great for the end user, the employee, because it is that forced retirement. And then you have investment choices, just kind of like the Trump account, whatever.
Yeah.
I'm all for something like that.
I mean, you talk about a bullish sign for the market, introducing all of that new flow and all of that money
gosh.
that's been going to God knows where in the government,
Right.
whatever they do with it, to hey, this is going to be actually invested in money that can be in the market. Yeah, that'd be huge.
It'd be huge.
Yeah, I'm sure
We'll
Trump
see.
will make it even better.
Yeah, he said did you hear his quote?
Yeah.
I really
mean, I
like
didn't-
the Australian way they do it, but we're of course going to make it better. We're going to make it better.
Yeah.
I'm probably did a really bad
But hey,
impression.
on that note, I like the fact that they're talking about this and that they're like saying, hey, what we have isn't perfect, and we're gonna have some issues in the future if we don't right size some of this. So let's like explore options. That makes me feel better than just continuing to kick the can down the road and act like everything's gonna be okay. So. All right, quick summary. So we got ETFs, continued rise, 16 trillion, catching up with mutual funds. Still a ways to go.
Still ways to go, but catching up fast.
Catching up fast.
Yeah.
For, biggest start to the year in 2026. On pace to have a record year. Trump account investment options, small cap outperformance to start the year, 22% versus S&P up 10% in the Australian retirement system. A lot going on, a lot to talk about. Any parting thoughts or words of wisdom for our listeners?
Nothing on the top of my head.
No, on top of my head, I was deflated last night after watching America lose.
Yeah.
And so now what do we have to look forward to? And Isaac's right, we have football season coming up. So, I mean,
We're still a ways
not all is
away.
lost. I know, but it's like, gosh, I just wanted to get here tomorrow.
Yeah.
So anyway.
John's got to do his 95 fantasy football leagues.
Yeah.
Oh, fantasy football. If we need any advice, we should do a show on fantasy football if you're up for that. Would that work
I'm
with
good.
the compliance?
We'll just set up me and John in here with mics and don't turn the cameras on. Just tell us.
Tell us that
Hey,
we're
employers
live.
wouldn't have to contribute 12% if all the employees didn't waste their money on gambling.
Nobody said he was paying for them.
yeah, these are free sites, Matt.
I'm sitting next to the two sports guys that.
Not financial advice.
Yeah.
Yeah,
no.
not good financial advice.
All right. Well, be sure, like I said earlier, be sure to check out Eli's data brief on the Trump accounts. It's going to be really good and informative. We appreciate you guys listening. Watch us. Shoot us an email. Give us a like, subscribe, and we will see you guys next week.
See you next week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.